Hi everyone, and welcome to another quick take video. Today we are looking at Aussie Broadband Limited. So this got on my radar because yesterday, which is Friday 22nd of January, it jumped up by 7. It closed up by 7%, which is fantastic if you bought it the day before. But if you bought it at the high, which I think it went up from, let's have a quick look. It closed at, what's this one? This one closed at $2.47 and it all went up to $3. So that's 50 cents extra. You're looking about 25% or so. So that's a huge surge, but then it went back down to just to close at 7%. But anyways, great effort from the company. So let's have a look at it. I know about it because broadband. But I don't know much about its operation, how it's making money, is it making money, and the reason for it to go up. Anyway, so Aussie Broadband Company is an internet service provider. It provides NBN and mobile service. So, with us moving towards we're already in the information age, so having faster internet is very crucial in a lot of things, including including doing businesses and all of that. Cool. So very simple to understand, and that's one of the great thing. This is one of the things that you want to look for in a company. It's just its business model is simple to understand. So what does Aussie Broadband Limited do? It provides NBN. Okay. All right, let's jump straight to financials. Cool. Ratios. Wow, it's very sparse. Nothing here. No quick ratio, no current ratio, no P ratio, no price to sell, no anything really. Not sure if they haven't calculated it or it's just the data is not available. PE, you can always calculate PE, but I think it's just they haven't calculated it for some reason. Okay, cash flow. All right. Okay, operating cash flow's gone up, which is fantastic. So, and then cash from investing activities gone down. Because there's capital expenditures, financing activities, borrowing more money. So it's expanding, and I assume with NBN there's a need for a lot of overhead, so it needs to borrow more money to expand. Balance sheet. Okay, current assets gone up. Let me see. Total inventory, so total receivables. So it's expecting to receive a lot. It's receiving more money. It knows, yeah. So there's a lot more money that it's receiving in the next 30 to 60 days. You got some cash and cash equivalents. That's fantastic. Total asset gone up also, expected as it expands. It doesn't have a lot of goodwill because it's quite a new company, so you can see the data in 2018. So and let's just first listed on 2020, so this must be a back data before it went public. So yeah, so it hasn't got a name to it, like a reputation that it can continue, it can capitalize on. Now, total current liabilities also gone up, like I said. So let's see what's the item here. You got short-term debt, expected, long-term liabilities, 78. So also gone up there. Looks like it's missing numbers here. So what I would do after this for myself, and if I have time, I'll do an in-depth on this one. Is to find out what are some of the missing items to make up that number. All right. Okay, and we go to income statement, then we jump over to the chart. Income statement, revenue's gone up, which is probably one of the reasons why it jumped up. And then you got operating expenses. Wow, it's like -2. There we go. Net income, -12. So it's making a loss. So it's a technology company. Let's see what it's listed as, a telecommunication service company. So look, it could be that because it's such a new company, it's setting up, but once it's get all the infrastructure ready, and it start charging people, it can make that back. So I'll be interested I'll probably be more interested in it if it's start to turn a dime. Jump over to the chart. There you go. We already looked at this before when we go calculating the highest it closed at. Was that jump up to 297? So that's the high I'm looking up here. That's here. Cool. Hard to say really. When is it just listed last year? Eh? Okay, it's not bad. If you bought it at $1.82. And the volume's increasing, so there's a lot of traction. But probably that's the buy point there. But it's already gone too far. So what I want to do is for a pullback to happen first before I jump in, if I want to at all. So between now and then, I'll probably research into this company a little bit more. So that's for investing. And there's not enough data to do any value investing analysis, even with the 3 years. If you do with the 3 years, it's kind of like, well, is it worth? It hasn't turned a dime. All right, let's look at the RSI and then let's do Fibonacci and do and work out our plan from here. We don't want financial. We want indicators. We want no, already got MACD before. So indicators. Let's do. There we go. Okay, so it's heading towards the overbought, which is understandable. And so let's leave it there. All right, bring up the old fib. The old Fibonacci. Oh, that's what I pressed. Anyways, moving on. Let's say do the no, wrong way. Let's do down there maybe. There we go. Oakley dokley. Wait for a retracement to about, I say, with this kind of surge. Right, I say it's probably will drop back down to the 61.8% mark, which is the $2.29. Or I'm happy to come in around here, probably put in the minimum because it's such a young company, and if there is possibility, it will grow quite exponentially. So, we're catching it in the very early stages, but I think it's going to drop back down significantly to the 61.8. Probably take a couple of weeks to do that. So, because there's a few things. It's a very small company, and people know it, but it's not on anyone's list, and that's what you want. You want things that's on people's list. So it's gonna start to slowly trade down because it's not in the spotlight. Right? Once it's in the spotlight, it's gonna shoot off, and that's what you wanna wait until it kind of trade down. If you got the cash and you're willing to wear out, like you could be up to 40% loss. I don't really want that, because I want to be able to develop my system so then I can say, right, this is the lowest this could go. I'm happy to come in. I want the best price possible. But if you're looking long term, it's kind of like, yeah, sure, no worries. So investing opportunity, maybe, but I have to 1, do more research, 2, wait for it to retrace. Trading opportunity, however. So if you doing momentum trade, I think you might have missed out on a momentum trade because it didn't sustain the price up here. It kind of dragged down. So what I'm expecting from this particular shape is that it's gonna come back down. So if you're gonna short it, if you know how to short, then yeah, go ahead. But if you don't know how to do it, then you just have to go long it. But I think it's gonna drop down before it comes back up. So you know, who knows? If there's a second spike, then I'm wrong. I can't help that. But yeah, it's gonna retrace. So at the end of the day, what I'm saying about this company is do more research about it. Wait for it to retrace to either invest or momentum trade. At the moment, it's definitely a very interesting company to explore and find out more. All right, well, that's pretty much it for today. Quick take video. I'm trying to like do these a little bit shorter just because from my Google Analytics, not a lot of people watch the entire videos. Anyways, if you like what you see, leave a comment down below. And like and subscribe, all that good stuff. And enjoy again. These videos are not meant to be financial advice. Seek financial advice from your financial advisor, all of that. And see you guys next time. Happy trading. Take care.